Good morning, it's Trisha, and I want to go over a couple things from Wednesday and also Tuesday. If you'd like more information on the setups, you can go to www.easyemintrade.com. And also, just a reminder that tonight I'm doing a webinar at 8 o'clock, and I'll go over the setups during that webinar. So if that's something that you're interested in, you can get the information on the site for that as well. So this is the NQ that I'm showing you, and yesterday, you can tell by looking at our broader view of the market, the 3,000 tick chart, that is pretty much sideways sloppiness. But the thing is that you can trade range trades, and that's if you have an area of support and resistance being continually hit, and that becomes pretty easy to do. You sell at resistance and you buy at support, and what you could do is you could wait for your stochastic to match, meaning you get up to a resistance area and your stochastic rolling below 80 and you sell. Or when you have enough room to up to resistance and down to support, when you're getting a signal firing off for the kaboom, our indicator crosses below zero here and we're close below both moving averages here. We are, for example, on this one, we're below our moving average here, and you take it knowing that you're likely going to get down to this previous area of support that held. So when you have enough room to those areas, you can wait for the setup. Otherwise, if you find yourself trading in a very narrow range, like let's say that it was more like here at this, coming down to the yellow line here or close from the day before, going resistance, support, resistance, support, resistance, support, then you have a choice to make. You either sit on your hands or you sell at resistance and buy at support without waiting for a setup. Because if you're trading in a very narrow range, such as I just pointed out, by the time you wait for a setup, you're going to already be close to that area that you're looking to get as your target. So there's no point in doing it. It's not worth your while or the risk. But when you do have a large range, then as long as you've got enough room for that first target that you're looking for, then you can wait for the setups and just take those. This was at 9:33, this setup here, and I'm going to tell you that if you take the setups that occur based on when they're firing off, you get your indicator below zero. When it first fires off below zero or above zero, below zero, etc., and you're taking it with the slope of your larger moving average here on our entry chart matching. So for example, short, sloping lower, and then if you look at your 9 weighted over here and it's also sloping lower, that's going to be a really high probability trade. You will miss out on some trades by waiting for that. For example, this one here for me at 9:33. It fires off and I have my slope starting to turn higher here, so I'm good, but here I don't. It's still sloping lower, so I pass. Obviously it worked out. Some people are watching a 1597 tick chart as their broader view, and I can't say whether it would be better or worse using that, waiting for the slope, but that's something that I'll test, and you can also test it yourself. But they took the trade because on their chart it was matching, meaning their 9 was heading higher, this was sloping higher, and you can tell by the color I have it. When it's sloping lower it's pinkish, when it's sloping higher it's green. So in taking that, they would have expected to get here and they were able to get through, so they would have got their first target and kept going. And so this was at 9:49. This one, same thing. It was a buy, expecting to get up to the previous area of resistance, and that was at 10:02. This was a sell, again expecting to get down to the area of support, and then it actually breaks and gets down to the 2000 area. That was at 10:16. And then here, when it breaks the area of support, then I wouldn't really be interested in doing range trades anymore. So here you get a buy firing off here at 10:29, but if you're taking it with the slope, you would have passed because the slope was actually heading lower, and also was not, for me, I wait to get above the 9 period weighted over here and was not above that. You can be very aggressive or you can be very conservative. Very conservative would be, is the slope match the direction that I'm looking to take the trade, and that first time when the MAC crosses above the 0 or below the 0. So here would be 1, here would be 1, here would be 1, etc. But here you would pass on this short because you don't have room down to support. And in a case like that, I would wait to get through that area of 2,000 just because of that round number. It's likely going to hold up. This one here was at 11, I believe. Some people would have passed on that because this is the 200 EMA, this red line here. I don't know if you can see it. It might be too thin to show up in the video. But a lot of people would have passed on that because this will act oftentimes as support or resistance, especially in a choppy market, apparently. But if anybody took it, they got there too. And then if they move their stop to their entry, they were stopped out back here. So they wouldn't have taken anything there. I don't trade during lunch, so that would be a choice that you, of course, would make for yourself. This was at 156, again expecting to get up to the resistance area here, and this was at 303, and you would have been expecting to get down to the floor trader pivot right here, best case, and worst case, and best case down to 2,000, which is exactly where you got. And pretty much the same on the ES. You can choose to buy at support, sell at resistance, or if you have enough room waiting for the setups when you're trading in a range like that, then you can, just take the setup as it occurs. And this is Tuesday. I'm just going to go over the morning so I don't wind up running out of time for the video. But this actually set up here for a short before the market ever opened, so not really anything I can do with that. And so then at that point you're just looking for a place to hop on board. And what we look for is what we have here. If you miss the first entry, if you have a strong move going on, then you can, there are a couple things you can do. You can wait for your histogram to start to replot again in that color. So in this case, red for short, or under 0, of course, depending on how you have yours colored. It might not be red. And take it there. Or you can just not really even worry yourself about the histogram. If it fits your trading plan, you can just look to take a pullback to the moving average. So no place to really get on here when it died right off the open. This all happened within 2 minutes. But here we had an entry, and this is the NQ still, you guys, at 9:35. And the NQ was much weaker first thing in the morning than the ES. The ES did finally drop as well, but this set up sooner. But this was at 9:35. Then here was a re-entry opportunity here at 9:39 when it went back to red. And, and at that point, it's moved quite a bit. Here is another opportunity here. You could have taken it here when it pulled back to the moving average and then started lower. Again, ignoring what side the 0 the histogram is on, or you could take it here when it looked like it was starting to turn back to red, and it might be so small you might not be able to see it. And that one, just depending on how you got filled, worked for your first target, or you could have flattened and canceled when you saw the divergence to the upside for a small gain, or you let it stop you out here. So either way, it could have happened. And then, of course, this was on news at 10 o'clock, so I'm not interested in that. And then we had this here, a short again at 10:07. And at some point you have to ask yourself, how many entries are you willing to take in the same direction when it dropped like it did? And that will be up to you to decide. And then, of course, we turned around and retraced 100%. I won't go over the afternoon, but not willing to take something here, buying off a downtrend. But if it fit your plan, you certainly could have done that. It does not fit my plan to go against the trend unless, like, let's say it hung out here and created a consolidation and an area of resistance, a new area of resistance. Then if it broke that, then I would be willing to go against the trend.